CTM. Mic check, mic check. What's going on, everyone? This is Jordan with Conquer Trading and Investing on this Monday, on this beautiful Monday morning. Looking forward here to a public live stream with you all to start this week off and to start it right. Just making sure we have everything here in the control panel as we want it. Let me go ahead and just adjust like this. And here we go. Hey, everyone. I hope you're doing well wherever you are right now in the world. Good morning, good afternoon, good evening. Getting ready over here to start our live stream here. And we should be live streaming this entire week, potentially even this whole year. It's going to depend on how it goes, what type of atmosphere we're able to create. This type of like expert trolling over here from Kenneth, like that stuff, yeah, that's not really going to float. I mean, Kenneth, if you're going to troll hard. I mean, this is just some weak stuff. We don't have time for this type of stuff over here, and you're not going to make it. You're just not going to make it over here because we got work to do. What we're trying to do is help as many people possible thrive. Absolutely. That's what we're here for. We're here to build each other up. We're here to create community, and we're here to teach people how to go ahead and make sure that they're able to conquer the markets, to profit from the markets. If you think there's anything easy about that, you are mistaken. It takes a lot of discipline, it takes a lot of work, and it takes a lot of focus. I am here, as people know, to go ahead and share my experience, my knowledge. I've helped a multitude be able to not only be able to go ahead and use the TA taught here, use the risk management, use the macro analysts, and be able to profit not just in a chosen market, in all markets. And that's what we're here to do. We're going to change it up this year a little bit. We're going to be a little bit focused also on some, let's say during our public live stream, some intraday timeframes. There are a lot of people out there. Big shout out to Soul with the dollar sign. I don't even work on the smaller timeframes within my training course. Through that course, he's been able to go ahead and get funded. A lot of traders out there are looking to able to leverage off of that type of arrangement. We're going to be able to help everyone here on the public side do that. And there we go. Let's start off. We got a big week ahead. A couple of things on the calendar that are very important. We have, obviously, out of the Eurozone tomorrow, we have manufacturing and services PMI numbers. I do expect that is either going to give the euro, right? We all know the dollar index, DXY, is highly composed of the euro. 57% of its makeup is inclusive of the euro. I expect tomorrow's number out of the euro to go ahead to see whether or not this epic rise that's taking place right now on the DXY, if you zoom out and look at this from even a different view, you can see that this has just been a huge, huge wave. Lots of momentum going straight up off that last pullback right now. Whether or not that's going to continue any further is probably going to be dependent on what happens with these numbers out of the Eurozone tomorrow. Lots of people, it seems, are really set up for what could be just really sobering times this fall and this winter in the Eurozone. Obviously, that's depending on what happens with their energy situation. It depends on what's happening with winter. And a lot of people right now feel that, if you're looking to short the market, that's the place to attack. Now, I know a lot of people are especially those that are from America, are very U.S. centric, right? And probably focused in on that market. We'll talk about that in just a little bit. You got to be careful. On the short side, you got to be very, very careful. When you start seeing the squeezes come in, it could be very painful. But I probably don't need to tell too many that right now, coming off of what's happened the last several weeks on U.S. equities and in the crypto. All right. So aside from that, we also have really what the markets are set up for is Thursday and Friday out of Jackson Hole, Wyoming. The Teton Mountains, we have all the central banksters getting together to meet and decide how they wish to rule the world. Now, in all seriousness, Powell's communication is going to be very important for the market and the next move on the market. Price tells everything, though, right now. And right now, price, you could see we had this breakout of this descending channel, right? Coming in for the retest, and so far it's structurally breaking down back below the support, and then that yellow line in the sand over here, that is the low of the CPI, not last Wednesday, the Wednesday before. And you could see that price right now is challenging it this morning, a breakdown below, and that's a structural breakdown that could add some fuel to the people over here. There's a makeup of the market right now. We have a lot of people who are short the market. A lot of people held shorts from the very bottom over here. And right now they're feeling a little bit of relief. And if it starts breaking down over here, they're going to start feeling comfortable once again. Then you have the short sellers over here, the people that came late to the party, the people that like got punished on the wrong side of the market all year. And then like, they're just like, you know what? My new strategy, my latest strategy is going to be, I'm going to sell the rip. And it's been a painful summer for them thus far. They have been selling. There's also a lot of people over there, a lot of influencers who are getting a lot of bearish engagement. And then like this whole way up, they've been selling the rip as well. And it's been quite painful. They're going to start getting emotional. If this starts breaking down over here, they're going to start getting emotional. And that could work out if we make a lower low, a new yearly low here on the equity markets. If price does not, and if prices comes into this area, I wish I could see a price. Let me move over there. If price comes in, I'm looking at over here where we kind of like that resistance and then became support in that area. If price only comes around down to over there, over here you have that support, then resistance, then flip to support in one of those two areas, right? And then puts in a higher low, they're going to get beat up over there. And then you have the smart people. The smart people, I'm going to be like Stanley Druckenmiller. I've been short the equity markets all year. And then I know that in a bear market, these things could rip your face off. So I got out of the market. I got neutral. Now, you know, as Stanley knows, timing's very difficult, right? So for a while, he was out of the market. You know, maybe he didn't catch the low. Everyone will have you believe that they got the high and they got the low. That's some craziness over there. Now, the best of the best, right? Druckenmiller, he's like, you know what? I just feel like I prefer. And then he might have gotten short over here, or he might be getting ready to get short over here. That's a position of power. Any of people over that are following that type of, let's say, movement, they're going to be, regardless of what happens, if they do reinitiate their short positions, right? Now, and they come in over here and price doesn't make a lower low, doesn't take out the yearly low, regardless of what happens, they'll be able to stay in a position power and manage that position, not afraid to get out at a break even, not afraid to get out at a small loss, but they will get out. It's not going to be painful for them. And at the same time, if this thing does continue to break down to new yearly lows, they're going to be pushing and riding strong. The bullish case, once you break down over here, is really at that point gone structurally. And at that point, the last hope for the bulls is going to be simply, does Jerome Powell come out and double down on the neutral rate being achieved out of Jackson Hole? And if that happens, I do imagine that they would be or setting up a very nice risk rally, regardless of the fact that seasonally September is terrible. See, right now everyone is saying that, well, we're just a couple of weeks away from really everyone coming back from vacation. Market volume picks up, a lot of volatility. September and October, they're known to be ugly, and a lot of people have these expectations that it's going to be horrific. And there's a good chance it's going to be. I think a lot of people and everyone out there is prepared for it. But it's not a given, right? And that's the thing, and that's why you want to follow what's going on the charts. Right over here, bullish case, structural case, below this yellow line over here, there's nothing to be had. And again, if you're bullish on the markets, at that point, you're kind of contrarian, and you're really just out there hoping. That's not going to get you too far, all right? So we're going to make sure that we stay on top of it and make sure that we are able to to lose our bias. All right. I want everyone to be aware of all sides of the market. I want you to be aware of what's happening psychologically with yourself. Know thyself. If you wish to be successful, first of all, you have to know yourself, and it helps really to know your weaknesses, right? And then at the same time, it helps to know what other market participants are feeling and what they're doing. So that's a quick look at the calendar. We're going to come and look at cross markets in 1 second. Before we do, I just want to reiterate, on the left, you're looking at the buy side of Bitcoin. On the right, you're looking at the sell side. Some nice positions initiated last week. Before what other people would consider the technical breakdown, CTM started going ahead, looking at the short side, now holding a position on Bitcoin, 9%, and on Ethereum, same thing over here, riding and closing a beautiful open position, 52% into profit, and then being able to talk about being able to trade what's happening, take a short position, that's now holding 10% in profit, and that's looking fantastic. And Ethereum on both sides this year. This is since 2022, January 1st. It's absolutely just crushing the market right now, holding an open position 10.8% in profit, 230%. We're just now 7 months. We're into August. 8 months into the year, absolutely conquering the markets, both sides without bias. All right, Bitcoin's not doing the same. But by the way, Bitcoin is not performing as well as Ethereum. That's to be expected. Bitcoin is up on both sides a measly 24%. Nevertheless, 24%. Why most people don't know what's going on. Nothing to let's say, not so bad. Not so bad. All right, what else are we going to look at? We're going to start getting into the markets right now. I'm going to give a brief overview across markets, and then we're going to kind of jump in, and we're going to be looking at some lower time frames. We're going to do it off of this template over here together. All right, so let me start over here, and let's take a look first. We're looking at the Nasdaq, right? So Nasdaq all year, obviously, you don't need to tell me, but since we're just starting here, since we're just getting back into our thing together, I'm going to, give a little bit of an overview of what's happening and where we are right now, and then always looking to also what potentially could be next. Why does Ethereum outperform Bitcoin? I mean, look, what's the market cap of each? Probably could start over there, right? I'm more also that's why everyone to know, I'm much more of a what is person. There are people out there who really like to know the why, really brilliant minds. And not only do they want to know the why, they're very good at articulating it after it's happened, right? And after something happens in the markets, then they'll do all their research, and then they're beautiful at presenting at the why. And for me, it's a great asset to have these people out there who are able to do that type of work. Because sometimes I do like to know the why, and I like to know what's going on. But at the same time, most of all, I'm just the really what is person. And if something's happening, I'm able to make the observation of what's happening. And I don't need to be comfortable with what the explanation of why it's happening in order for me to be able to either understand that it is happening or trade off of it. So I'm a what is guy, right? And then the why is also beautiful and nice, right? So we just know, and this is going back CTM style before the 2020 happening. It was everyone was let to know that, listen, what's going to happen, Bitcoin is the rising tide that lifts all it boats. And when it does, we expect Ethereum to outperform. Sure enough, that has occurred. Some interesting dynamics are also occurring. Right now, we all know that ahead of us, we have the merge or the potential merge about to occur, Ethereum 2.0. And there was a lot of question about the speculation happening in the run up, right? Let me pull up a chart really quick of Ethereum as we talk about it. Like if you go back just a week ago, everyone is like, this is all happening because of the merge. And the way that we viewed it was, well, this is happening right now because risk is rallying. And after the merge, assuming that it's a successful merge and nothing fatal happens, our expectations is that it's not going to necessarily be a sell the news type of event. I mean, it could be over, a given amount of a short time frame, whether you want to call that, 24 or 72 hours or what have you. But what's going to be dependent on what happens next with Ethereum is going to be what happens with the overall markets and whether or not this current risk rally continues. And then you could see that that's affirmed as being correct when all of a sudden risk rolls over, not just Ethereum, but risk in the markets rolls over, and then Ethereum rolls over with it. All right. So think of Ethereum right now as really just a proxy on the markets. And also at the same time, the thought escapes me, so I'm just going to let it go. I don't know what else I wanted to add over there. Right. Do I find Ethereum riskier? In what sense? I mean, we just fielded a beautiful question for you. We're going to get back into where we're going to go, but in what sense? So you have over here so far, 12% drawdown with a 230% gain, and then versus Bitcoin has a 24% gain and a 23% drawdown. So the way that I would view that, I would say, well, from this perspective, hey, that's only 8 months. We could go back way further than that on both of them. But, from that little bit of time frame I just showed you, I would say that Bitcoin is riskier. Yeah. So that's all relative. That's all relative. All right. Now, let's jump back over. Let's get going over here. Matt, great morning. Good morning. Yeah, no. Again, just my own personal opinion. Anytime I share my own personal opinion with all of you, please take it with a grain of salt. What we do here is try to teach everyone to be able to view the market, to view things, to view life in their own way, using that beautiful mind of ours with critical thinking. And that means that you have to be able to take in different views, even if they don't align with your own. You don't have to agree with them, but if you're unable to, let's say, consider an opposing view, then at that point you're just handicapping yourself. I hope that you are able to over time find my view as one view that helps you go ahead and form your own. And what I mean by that, like, you don't have to agree with it, right? It's just as helpful if I say something and it just solidifies and clarifies for you your own point of view, because you don't agree with what I'm saying. So what I'm getting at over here is I don't really see that where Ethereum is being driven by the merge. It seems to me it's driving by the current risk rally, and if that risk rally comes off, same thing with Ethereum. I saw a chart by Dylan showing Nasdaq future positioning with Ethereum, and it was just a perfect overlay of each other going ahead. And also, again, there are lots of like, oh, Ethereum's pumping, it's because of the merge. Maybe not, right? We've looked at the future positioning, right? And for sure, there are lots of participants looking to take advantage of a potential, let's say, pump because of, into the merge. But let's see how they come out on that trade. Max Payne was about 1350. Let's see how those macro guys do on that trade. We'll find out. But I don't think it has anything to do with the merge. What we're seeing, is it possible you're seeing a few people trying to, that would, instead of deploy capital towards Bitcoin off of this risk rally, then move it towards Ethereum? 100%. We've talked about that. That could be adding, we call it the oomph factor. It could be adding a little extra oomph, but at the end of the day, it is the overall market that really seem to be directing. And look, you could have had that debate a week ago. It's kind of hard to have that debate now. Like last week, that was our view of it. And then since, as risk came off, we're looking at equity markets rolling over. We're looking at Bitcoin rolling over, and Ethereum's rolling over with it. So if it's because of the merge, then you would have thought that Ethereum would have held up better, but it's not what's happening. So if you believed up until this time that the reason that Ethereum was rallying was because of the merge, okay, well, now you have to reevaluate that. Do you still think that as risk came off and Ethereum dumped with it? So just go, it's okay to be wrong. like, first of all, as a trader, expect to be wrong a lot. It's how you manage it when you're wrong that's going to lead to your success. If you feel the need to be right, that's going to be reflected in your overall P&L, and it's not going to look good. It's going to look ugly, right? So again, coming back to know thyself, figure out, do you really need to be right? And if you do, you're going to have a really hard time. It doesn't mean you can't make it, right? You just have to first figure out what your weakness is. And if you can't improve upon it, then you best be trading off some longer term time frame investments, right? Because if you're a trader, you need to be able to, in a second, turn on what you believe and just find out what's happening and get on the right side. Boom, boom, boom. That's AM. Beautiful. And that takes time. AM. So often one thing that you could pick up on is my tone. And if there's a little bit of cadence and confidence to it, that's something that obviously that I really see happening and believe. And then there are other times I'm looking at something and then my voice starts getting a little like and I've learned to instantly hone in on that. And whenever I find myself picking up on that, that means I don't know. And when I don't know, that means I back away. Yeah. What an advantage to be able to back away. All right. So that's another thing, though. It takes time, right? And that's why I have to be able to give you all the ability, that precious resource of time, because it's not as if you could just step in and I could be like, here's the 10 golden rules that is going to make you a successful trader. Yeah, we could have 10 guidelines that are going to help you get there, but there's a lot more to it than that. Fabio, great morning. I hope you're well and doing great. Bitcoin is slow old tech. See, now maybe either that's like, no, that's not good enough. That wouldn't be good enough. Yeah. Slow and old tech. Yeah. Bitcoin is boring. That's what Bitcoin is. Bitcoin is boring. Oh, Bitcoin is boring. It is what it is. So before we get into the markets, also let me just talk a little bit about people and their thoughts on Bitcoin. A lot of people could be lining up charts off of the halving and being like, you know what? 4-year cycle is definitely in play. This had nothing to do. Look at that. I'm on October the 21st. It has nothing to do, Jordan, with 5 days earlier, the Federal Reserve saying in their Fed meeting minutes that, you know what? They're going to be tapering down their QE purchases. And then 2022 was going to be, as we called it on that same day, a rate shock. Bitcoin is not immune. That's what happened, right? And now, of course, my own personal bias at that point was that we were going to see some type of massive blow off top into that cycle end. It didn't happen. Didn't happen at all like that. And you know what else didn't happening? Lengthening cycles. So we didn't have a blow off top and we didn't have lengthening cycles, yet people still believe that from where we are right now, that most likely as we look towards the next halving, that price is, going to go sideways towards down and then probably be roughly 50% off the all-time high as we come in towards that halving. And then approximately 6 months later, Bitcoin is going to be making new all-time highs and then the bull market goes. I mean, that's something that you should be aware of. Obviously, you could see that I'm aware of it, but we've been aware of that for many years now. But to think that that's going to happen again, I can't get aboard that. You see, when we did not have that blow off top, one thing that we were able to do ahead of time, December 2nd and 3rd, say, hey, listen, if this occurs, this is a technical breakdown, take profits and make sure you de-risk down. Right? Now, me personally, I'm not selling my spot. That doesn't mean that you don't have to. Pay attention to what's happening. This is a big technical breakdown. You know what? Regardless of what you want it to happen, something different's happening. Again, if you felt like that you were owed some type of like $250,000 Bitcoin and then it didn't happen in there, you're not going to make it in the markets. You have to be able to adapt and adjust. One of the ways that I've adapted is that I'm not going to rely on any type of 4-year cycle behavior as an investment thesis going forward. You could see that obviously that's paying dividends over here. If someone relying on 4-year cycle nature have the potential to be up 230% on Ethereum in 8 months? No, obviously not. There's much better ways to go about it and do it. You could look at, and one way that I look at it that could be a little different is that you could also be looking at that the high was in April. Elon Musk on Saturday Night Live pumping Dogecoin. My friend calling me up, hey Jordan, I finally entered the cryptocurrency market. You bought Bitcoin? No, I bought Dogecoin, right? Look, the way that I look at it is that you could see that, well, we had this capitulation event, or maybe capitulation event, quasi capitulation event. Either way, we had a lot of forced selling. People that did not expect to be selling liquidated. 3 Arrows Capital, and then all the contagion surrounded by it. We also happened to see a couple of other capitulations around that time. Is it to say that the structure of the bear market could potentially be in place and rhyme a lot with past bear markets outside of here of price making a new all-time high? People like the Rational Root have shown us how this was almost willed because of the amount of people holding Bitcoin to that new all-time high. And then you could see that price bottoming in the zone that it happens around. Is it a foregone conclusion that price will not make an all-time high until after the next halving? Not for me. For me, it's dependent on the macro, what happens with the macro, and most importantly, the Federal Reserve and its policy. Right now, a lot of people have been talking about how the Federal Reserve has been tightening because of inflation. And, because of that, they're going to keep continuing until they either knock us into a severe recession or some type of even depression, because they have to get inflation under control. I think a lot of people caught up to that a little bit late, and then once they did, they embraced it. But you got to go with the flow, and we look at what's happening as far as prices in commodities, whether or not, for me, most importantly, what's going on with oil. And by the way, oil is showing us what? Oil is showing us that it's priced very strongly for a recession. Let me jump over here and jump over to WTI, right? You could see that around, and it's true, it's around this time over here that most people just embracing the idea that oil is going up, and oil is going up really high because of supply side constraints and whatnot. And all that is really happening and could be true. And we could see as what looks like some type of descending wedge is occurring. I need to get something up here on the screen before we could go any further. I feel a little bit handicapped over here. Let me get a pointer, right? Jen, great morning. Good to see you here this morning. I want to pull up a screen brush, and then I want to go ahead and activate that into ghost mode. And then so I could talk to y'all, right? With a little bit of a pointer. All right, now we're good. And as I'm looking at this, it looks like a really sharp descending wedge. And at any point in time, this thing could be back up towards those all-time, or I shouldn't say all-time highs, yearly highs very, very quickly, right? And if that, look, on DXY, it happened. It didn't last as long, but look, here was a downward descending channel. And on the breakout, right quick, it's back up towards those highs. It could happen on oil. It could happen on oil very quickly. And if it does, that's going to be signaling to me that, hey, why I believe inflation is sticky, it's not only sticky, it's actually running hot again. And if it's running hot again, that's going to say to me, oh, you know what? I know that the Federal Reserve can't do anything about the supply side, but they're going to have to do whatever they can to remain and stay relevant. And they're going to be getting in front of it and potentially tightening until they break things a lot sooner. Now, when we talk about, or you heard the meme, I like to refer to it as a meme, that the Fed is tightening and they're going to tighten until something breaks. I think people automatically assume that means Fed raises rates, things break. But it's the timing in between. As a trader, as an investor, you have to get right. And things sometimes take a lot longer to play out than you've heard a lot of podcasts going back until April and May. And by that time, people expected by that time that things would have had broken already. No, they didn't. We're into August now. I know that people don't like to really look at it, but if you look at if you search Fred repo, you'll see that there's a massive amount of liquidity out there right now. That money is being parked overnight at the Federal Reserve, and they're paying something like $250 million in interest on it. Now, that could change very quickly. If all of a sudden Apple all of a sudden blew up, that liquidity would disappear in overall in the markets in a heartbeat. It's not what's happening right now. All right, let's see what's going on. Oh, Jose, I'm glad you're here. Always makes it a beautiful day. Got Croatian. I was just, Marco, visiting your beautiful, beautiful country with my two oldest daughters, 9 and 6. We spent 2 weeks over there, and beautiful, 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 beautiful. I think it was my ninth visit as well over to that beautiful land. Thank you for opening up your home to all of us. Really grateful for it. All right, so we're looking at oil, and oil is selling off this morning, and it's saying, whoa, recession coming, recession coming. We got the 10-year yields, and they are once again over at 3%, right? And you could see that little bit of a trend change. I like viewing it from our view. Let me see if I could jump right over to it and back above the yellow line, right? Now, we were able to set up and take a look at some counter trend sell impulses, right? But those impulses have now been faded, whether you're looking at the dollar over here, woo, huge breakout, and the 10-year. And what is it saying? Markets are getting ready. And I think that's coming off of all the Fed speakers we saw last week with their verbal intervention, trying to say that, no. I don't care what you think you heard at the press conference from Chairman Powell. We are very hawkish. We're going to continue to be raising rates and tightening, and we prefer to front load that. Now, there were some breadcrumbs thrown out there, like these effects take a while, and there's finally a little bit of, let's say, hope out there for anyone with the dovish or wanting the Fed to pivot dovish to say, well, a soft pivot has taken place. For me, just let me define it for you all. A pivot is when the Fed moves from raising rates to pausing rates. The Fed has not pivoted yet. If people talk about a soft pivot would mean that the degree of the rate hikes is decreasing from 75 basis points to 50 basis points. That's the turn, right? Markets are forward thinking. That's the turn. And then if they go down to from 50 basis points to 25 basis points, then to a full pivot, a pause. So that's what's happening out there. And you could see the positioning in the markets because of that. As we look at, I'll just pull up the Nasdaq over here. And this is when that began happening. Don't forget, we're looking at over here, this is CPI, a 9.1 reading. The markets were figuring out at that point, we were watching commodity prices. That might have been a near-term peak. That's what the market saw. That's what the market picked up in real time, not afterwards saying, oh, what happened was, and here's the why. In real time, here's what's happening. Here's what we see happening. Let's see if that continues. And then don't forget, and then we had another CPI print come off over here. And this one was 8.5, right? A lot of people off that rally were like, yeah, laughing at the market rallying off a 8.5 CPI print, but that's not what was happening. Those are what you call newbie analysts. Like they're just learning and figuring it out. No, the market was rallying since the 9.1. That's when the market's been rallying. It's not rallying off the 8.5. And then since then, you saw a lot of Fed speakers say, no, you got that wrong. That's a tool. The market started easing off of the last FOMC press conference, off of Jerome Powell's neutral rate comment has been achieved, and you started seeing the markets continuing their rally. But that's counter effective to what the Fed's trying to do. So then they come out there and they talk the market down, and they're winning. So it all comes back down to, as we started earlier in the week, to what happens over here Thursday and Friday, and what Powell communicates to the market. Now, the market is positioning once again for the sell side and at the right time, right? You saw a lot of people at the right time take that turn over here. When I'm talking about right people, I'm talking about Wall Street money. They are positioned now, as we talked about, the Druckenmiller positioning from a position of strength. Regardless of what happens this week, whether or not they get to continue to push their trades or get out and reposition for the upside, they're going to be good. Now, the way that Powell gets to kind of like win here this week is if he's able to keep the market guessing. He does not want to give the market a go-ahead that right now that the Fed is actually, let's call it a soft pivot, right, in action. He doesn't want, because then the market's going to begin front-running and rallying up, and then everything they just achieved is thrown out the window. He also, I don't think, this is my own personal opinion, so raising my hand, be careful. This is my own opinion. I don't think that he wants to go ahead and crush all hopes and say, you know what, September, we have a 75 basis point rate hike planned, and then all of a sudden see a cascade waterfall down, taking out those lows and making a new big leg down. I think that makes his job very difficult going forward as well. A lot of the goals are being achieved. Look at the price of oil off here, down massively, right? So it's a fine line. If he could walk away from this week into September, don't forget FOMC in September is towards the end of the month. If he could walk away, and 21st of September, we have FOMC, 2 p.m. Eastern time, 2:30, the press conference. If he could walk away with keeping the markets on their toes through September, but give them enough hope where that September ugliness does not, like the dragon doesn't raise its head, that's a win. That's also difficult to trade. Sideways markets are very difficult to trade. That's our little bit of a heads up coming into what's going on. So, I will see you at 12:30 Eastern time as we go live for our CTM session. Great to see it. I flew into Dubrovnik, and then we made our way over to Bosnia-Herzegovina. Sold the $, you're always on time. Let's go. That's a good segue into next. Let's take a look at what's going on here. Sold the $, from a view that you're going to start to appreciate, I think, knowing what you're doing on, let's call it the intraday timeframes, right? So I'm going to look at this. This is all new to share with you, specifically here for these public live streams. We're going to keep following markets with this type of view to make sure that people are able to make sure that they're able to stay, most importantly, on the right side. There's much more to trading than being on the right side, right? What do you mean? Most importantly is risk management. Most importantly is understanding to be profitable that most likely, if you're on a very low time frame, you're looking for a higher win percentage, right? If you're on a medium, a swing trader's time frame, 8-hour time frame, at that point, you're looking for most likely somewhere between, let's call it 35 and 55% win rate. That's the sweet spot right there. Now, that's counterintuitive to a lot of people. We talked about it early in this session. A lot of people have this need to feel like they're right. That is not an asset when it comes to the markets. That's a detriment. Know thyself. That seems to be the lesson being presented today. So if anyone needs to hear it, make sure you get on it. Let's start off over here. Let's look at the Nasdaq, and we are seeing over the past, let's say this is 2 or 3 weeks. We've been seeing this extension of this upside rally. And only thing that I want to point out to you and ingrain, because again, we're going to start looking at this every day together, so it's going to become natural for you, is that why we're looking at the trend being up, you will only be looking to buy. That means that, yes, you're not looking to catch the top. You're not a hero. So you're not looking for any type of like catching the top. All right. Now, if you look back and you could say, oh, okay, that means from April, sell the rip. You remember the April rip over here? So if you were on the short side from April all the way through July, the end of July, and just attacking on the downside, Jordan, that means I didn't get this rip over here from those couple of days in May. Yep. And that means off the very low on that Monday morning, I didn't catch that massive up move over here. Yep. Exactly. You got on the side. Let me show you. Let me see if my data goes all the way over there and what was happening. All right. I want to take me to July 21st. I'm having you focus right here on this big up rip. And I want you to see what you should have been doing during that up rip over there. And so this probably needs to be adjusted for you. But a lot more listening to what's being presented and a lot less thinking about asking questions is going to take you a lot further. Yeah, it's going to take you a lot further. So I'm just affirming that and not calling you out on there. But I am truly saying that if you're spending a lot of time in the chat box, you're probably missing what's being presented. And what we do here is we're students of the markets, so that we're looking at things and lessons as they're giving, right? We're not in a rush. The market's always going to be there. All right. That's what we want to get into. That's for everyone, right? Sound issues. Yep. You were good in the hood. We saw some masterful trolling last week. Someone trying to get in there. But anyway, let's keep going. Mr. CTH, thank you. Big shout out. All of Silent Majority. Glad that you're here. It is good that you're here. All right, let's keep going. Boom. Justin, just a big heads up. Tomorrow's big high impact services and manufacturing PMIs out of the Eurozone. Specifically, watch the numbers out of Germany. Those are probably going to be what keys off the next move out of on the euro. So watch for that. And then above all, as you already know, follow what's happening on the technicals. So probably a much better way to do this is going to be this. Let me jump over here and just let me change. I'm not going to do that. I'll do it offline. Is this white bars over here? Those should probably be red for you, right? Green is obviously buy, but here's the thing. In this period over here where we're in a downtrend, I know this is white. If I make it red, it's going to be a lot more intuitive for you. So I will make it red for you. But in this area of white, which is down, which is red, you are not taking any buy entries. So over here, as price goes green, you're not attacking. Now you were just attacking over here. This would have been red, right? This whole area on this green, let me just zoom out, right? Jordan, I didn't get to participate in any of this. We were talking about this one over here. That's what we wanted to talk about. Jordan, I didn't get to participate in this big rip to the upside. No, you did not. You were out of the market. You weren't attacking to the downside. But guess what? You were attacking to the downside when you had the momentum. Look at this big, massive waterfall down. That means for all of that, I could go like this better. All right. From all of this, yeah, this is where you're attacking. This is where you're attacking. By the way, that's all one trade. You're just macking. Look at that. That's the move you're looking for, right? And that doesn't come every moment and every day. Throughout this whole downward move, you had lots of like skip steps, right? Taking the downside. On the upside moves over here, nope, you're staying out. You're not getting chopped up by only participating in the direction of the overall trend. That means there will be some big moves that you miss out on. This is a big move from here to here, or in relation to that down move, it's not so big, just trying to make the point. But then again, you would be getting this one, right? So that's right there is the overall summary of what we're doing. You could go over to the euro and take a look at it. Euro never even had a chance yet to make it to the upside. Let me show you what I mean by that. And so, by the way, maybe what that means though, look at the euro, right? All the way up here from February till now has only been sell side. What that means is off of that July, that was the July CPI, all the way until that big rally. That rally, by the way, if you look at my mouse over here, that's like straight resistance. I missed that. I missed that over there myself. Now that's CTM 1.0 basics. In a downtrend, hey, I'm in a downtrend. Look to sell off resistance. That right there, watching that price come into that resistance and then resume down, that should have been a layup. That's not where my focus was, but nevertheless, I also missed it. So I'm pointing it out to myself not only twice, but 3 times. And what I'm doing is I'm ingraining that in my head. I'm always trying to rewire my mind. And I pay attention to what were mistakes. Very, very often. A lot of people, we focus on what we did right, what we did good, where we got it right. And that's human nature. That's not you, that's human nature. As a trader, we want to be able to go back to know thyself and conquer our own nature. We don't get to conquer the markets without conquering our nature. Nevertheless, the point I wanted to make out is over here is since February, late February, this thing has been in a massive decline, right? Very easy. Now here's that. I was talking about that move into resistance over here, right? So here's that big up move. Here's that big up move into the resistance. This point, you're on the sidelines. Yeah. If this happens, time of day is very important. We're not going to talk about time of day. It's obviously going to be different for the equity markets and then different for Forex, but we'll talk about them both in sessions ahead. Time of day is also important. Nevertheless, look at this. You might try in here to attack to the downside. We're still in a downtrend. Doesn't go anywhere. Get out. You don't need to, this trade doesn't need to roll over. This trade is a success if you get out. You don't need to profit. You just need to get out. And by the way, oh, look how smart it was to get out. I'm glad I wasn't out. I'm glad I wasn't on the upside. Again, I'm looking to attack. Oh, that's a loss. Oh, wait, you're telling me that I don't need to have a high win percentage to be successful? Nope. You're doing something wrong if you have a high win percentage. Most people don't realize that. Finally, getting an opportunity here. And this one with the trend. Trend is down with the trend. This one going off. All right. How long we been live over here? We've been live about 40 minutes, 45 minutes. What about the DXY? Yeah, that's beautiful. I like being right. That's true. That's probably a true statement for everyone. I like to be right. Good. I know for sure you like to make money better. I know for sure you like to make money better. So view being right as over not just one individual trade, but as over a series of trade, making sure that your P&L continues to go the right way. And then you just reframed something that works in your favor. DXY, right? Now, myself and what I was doing in CTM and on the Twitter on the public side did very good about pointing out this sell impulse over here, but it didn't do very good at all. It did very bad about catching the up move to the upside, which is with the trend. I thought actually that price was going to be going sideways in this area over here, and I was just trying to protect myself from some type of chop, and I did very bad about catching the impulse to the upside. And that right there is, see the trend line, and it's very quick and easy, right? So let's view it in the way that we just talked about over here, as on the public side over here on these regular live streams we're going to be putting together, making sure that we form a good atmosphere over here, right? Good atmosphere. That means if you're out there trying to get some love and some attention and you're trying to do that in a negative way, trying to get some negative attention, I don't have time for you. You're not conducive to what we're trying to achieve over here. This is not any type of charity. This is love. Love sometimes is tough. You have to understand that. This is not the place for you if you're going to be looking here to try to like foster any type of negative attention. You are prohibiting myself from accomplishing what I want to accomplish by the environment I want to create, and you're accomplishing someone else out there for learning something that could potentially change their lives and the lives of all those around them. I just want to be very clear about that. I don't care if you have an opinion. It doesn't mean that it's going to be heard. This is not some type of open forum where you get to like just, it's not like that. I want to be very clear about that. All right. So what I could have done better, right? We're going off of, well, we're in a strong uptrend. That means I only want to be buying, even though Jordan wanted to be just a little bit of this is a hero or a show off and talk about, as everyone starts talking about 120 DXY, nothing in the way, that no, we just had a sell impulse trigger and you got to be on the right side. And yeah, that's all good, but it's not good overall. Yeah, not at all. So it just means instead of going for that sell impulse, nice to point it out as it's happening, but you want to be on the sidelines over here. You're trading against the trend. There's no need to be a hero, right? Small loss, okay? Small loss. Back in, right? Back in, going nowhere. Ooh, that's the hard part for a lot of people. That's the hardest part. Understand that this over here is the hardest part. Lots of back and forth, lots of small losses. Lots of small losses are going to get you really far because you're not dwindling down that purchasing power, that precious resource, right? Sidelines, sidelines. Boom, here comes the attack. All right. All that chop, I didn't get anywhere, but I made back all that chop. All right. Boom, boom, boom. Right? Like I'm not a boxer, but it's kind of like the movement of a boxer. You got to watch him dance. You got to watch his feet, right? This is you as a trader moving your feet. This is where you're going back and forth. All right, back, catching back up, not getting ahead. Boom, 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 and then you get it. All right, there comes the explosive move, and that comes the fortitude. You don't get to participate in the big moves to the upside if you don't have the fortitude to stick it out. Yeah, that's a large part of being a trader is discipline and fortitude. If you don't know how to short Bitcoin, and if Michael Burry is asking a question like how he doesn't know how to short Bitcoin, there's the search engines are beautiful. You could just, search engines for basic questions. Dr. Michael Burry, I would let him know he blocked me. He blocked me on Twitter when he pointed out that beautiful head and shoulders on Bitcoin. Yeah. So anyway, you gotta if you're asking something basic, you gotta be able to go ahead and do that research on your own. All right. You got to be able to do it. Again, last warning, we're not in here for any type of people that are lacking on any type of attention. That's not how this goes. That's not conducive to us achieving our goals. And the same way that we cut losers short in the markets, same way that happens in here. All right, that's the environment we're trying to create for everyone. All right, everyone, that's our session for today as we start kicking off back into regular public CTM uploads, making sure that we can help as many people as possible. Before we get off today, let me just go back and look at a couple of different, see if I can find any questions we want to talk about. Yeah, I mean, look, that's so important. There's like learning the basics are essential. Learning the basics are essential. How do I place a buy order? How do I place a sell order? What's a market order? What's a limit order? What's a buy stop? What's a sell stop? Yeah, there is an amazing amount of resources to help you with all of that. Thank you very much. I appreciate that so much. All right. So let me go ahead and just put it in. Why? Just go briefly through some of these questions. Anything that you are commenting is important to me. Let me go ahead and go back and read a few, and see if there's anything else that we want to talk about as we continue forward. Great question over here. We got the music in the background. I don't want that up. Hold on one second. Let me drop the music. Let me come back. We'll answer this question. We'll talk about this question, I should say, and then we'll call it a wrap. So let me jump over, zoom out over here, come back in. All right. Boom. All right. Great question over here. Do I think that the U.S. could replicate the UK CPI print and more bloodshed? Last week, what was it, a 10.1% print out of the UK last week? I think it was over here. Let me come back. And it was on Thursday or Friday. Thursday. Huh. Maybe I have to have this one in as well. It was 10.1% though. Hold on one second. Huh. So I can't find it on the calendar. It was 10.1%. Do we think that the US could have, look, the next CPI print, I don't think is going to, I think it's going to be lower than 8.5%. The reason I could say that is we could look around at most commodity prices. CPI is a little bit of a lagging indicator. It seems that we've seen what were the greatest causes of the most recent CPIs coming off. My expectations are that it comes in lower than 8.5%. That also, by the way, that's two prints in a row that are showing a trend of lower prints. That gives also the FOMC a little bit of a cover. Don't forget, the one thing that people aren't really looking at is that my own belief is that what they're looking to do is to extend the cycle out as far as possible. One of the tools they do that is verbal intervention. I'm getting ready over here right now to break down below that CPI print from Friday. One of the things they use is that verbal intervention. They are helping the markets tightening last week, all that verbal posturing, right? So one of the things that I think that they try to do is extend the cycle out as far as possible, because if things break, or if they cause things to break, or if they tighten so much as that things break, when we talk about things breaking, we're talking about the credit markets, not the stock market. And then that means that they have to come back in and then go ahead and restart balance sheet expansion, restart quantitative easing. And that means that, you know, the government is going to come to the rescue, and they're now going to go back to that direct stimulus. And that's going to cause inflation to raw out of control. I don't think that the Federal Reserve is in such a rush to do that. I think that they want to go ahead and extend the cycle out as far as possible, right? So again, a lot of people look for straight up, straight down, and sometimes things could go sideways. You want to watch out for that. Do I think that the US could replicate a high CPI print? That's why we watch things like oil. One of the greatest risks I see to the market would be seeing oil. I'm trying to find out where my latest chart. Well, I'll just look at this. One of the things that we watch out for is oil coming over here and shooting back up. If oil starts going back towards 120, then we're going to see much hotter CPI prints coming in. It's not as simple as that, by the way. There's much more complicated. We've been talking about that the last several weeks, and then the FOMC in their last meeting minutes mentioned exactly that. They are noting that, look, although the most recent decline in gasoline prices would likely help produce lower headline inflation in the short term, we think about this also as near to intermediate term. We're looking longer term for inflation to rise again, right? In the short term, declines in price of oil and some other commodities could not be relied upon as providing a basis for sustained lower inflation. And if they come back up, that lower inflation is gone. So it's dependent on price and what happens going forward. If we start seeing not only oil, but specifically oil, as also here the Federal Reserve is pointing out oil, right? That at that point is going to say that we should be expecting hotter CPI prints. If you're asking if it could happen, yes, it could happen. If you're talking about the UK, one of the things that they talked about in the last 2 weeks was changing, let's say, the desired inflation rate from 2% to 4%. And I think that could happen. I think in the US, I think that was a trial balloon. I think that's probably along the lines of not only where the UK is going, but also many central banks. And that right there is probably what we're looking at, because the inflation is sticky. It's not going away. What the market is focusing on right now of whether or not it's starting to come in year over year and month over month. All right, everyone. Thanks for being here this morning. I'm going to get to work, and I'll see you all I'll see you all later. Thanks for being here. Yeah. May God bless you all. Have a beautiful day, everyone. I'll see you all tomorrow morning. There is, or there should be, there's not yet in the description below, a link for the Telegram to alert you when we go live. If you go ahead and subscribe to the channel and hit the bell icon, you will be alerted. I'll see you all later. Have a beautiful day. Talk to you soon.